Let you go, Feroze. Leave us with the best portfolio allocation right now. What would be, your exposure to mid cap, small cap, gold, if at all, other asset classes?
Yes, so in the large cap, in our current 14 scheme model portfolio, the implied large cap exposure is about 50%. There is about 29% of small cap and 20% of mid cap. It is very, very contrary to how a person would believe. 50 is for large. Generally, mid caps have a larger allocation than small caps. We've turned it over its head. Small cap has a larger allocation than mid cap because we're not very comfortable with the 150 companies earnings potential, which is called mid cap. Now, coming to from an asset allocation standpoint, I think India is going to an election year. Having large portions of debt is going to be very detrimental. India's allocation to debt is significant with respect to only about 12-13% of India's households have equity, and the rest of the 85-87% is debt and other instruments. So I would say that going into the election, if you stay out and stay in debt, it would not be a great thing. So I would say very little allocation for long-term monies in debt. Gold is definitely a great hedge and a good plan B. You can have sovereign gold bonds because you get a fillip of almost about 4% per annum because of the tax advantage and also the fact that you get an interest. So sovereign gold bond is gold plus plus. And if a person realizes that and converts all his gold, which is coins, bars, not jewelry, of course, the women would be very, very upset with that recommendation. So coins and bars could be converted to sovereign gold bonds. That's a more important efficiency item in the portfolio than buying new gold itself.
Good to have you on board. Thanks, Feroze, for joining in and giving us your take.